Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is August 20th, 2016. It's about 6 o'clock Eastern Time. And we want to talk to you today about the weekly market review. Before we do so, let me direct your attention to the bottom of our webpage. If you look at the disclaimer, this section in particular is what I want to highlight, which states that our products and services are provided solely for educational purposes. Our written and verbal statements, including those provided on our website by our staff members, testimony individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. The government does want us to let you know that we are not licensed financial advisors, so please, before you make any trading decisions, please consult the advice of a licensed financial advisor. All right, now that being said, let's go to the chart of the week. This is the SPX, all right? This is the SPX on the daily chart. Not too much information that we can, gather from here per se, all right, except for the market is, looking good. But if we go to the weekly chart, now we can get a little bit more information, all right? And what is the information that the weekly chart is showing us? And it's simply the fact that this market really didn't make any decision as of Friday, yesterday, okay? Yes, we had a little bit of down days and up days and all that kind of stuff, but the good thing about it is that right now we are showing that it made a new high as well as it made a low as well, okay? And whenever you have that, that's simply just telling you that the market is undecided, and again, it ended as a doji, okay? So it doesn't mean that it's going up or going down. It's kind of like at a stalemate right now. So that could be good news, that could be bad news, because that doesn't necessarily give us a direction as to like where the market is really trying to go. It's just taking a break, and that's okay. That's part of trading. Sometimes you take a break. If we look at the monthly chart, all right, and we zoom in, we see that the market is still holding healthy. The line that we do not want this market to cross below is this area right here, okay? We don't want to see the market go back down below this area right here. So, as long as the market doesn't do that, the market is still looking healthy to the upside, all right? And so we hear a lot of stuff about all this bearish market. I can't tell you how many radio show hosts, financial radio show hosts that I was listening to this past week that was talking about how this market is at an all-time high and it should definitely come crumbling down, and that the market cannot sustain itself, and all this kind of information, all that kind of stuff. At the end of the day, unfortunately, because they're not looking at the chart, it's hard for them to kind of tell. And I just tell people, I said, look, don't panic about it. If you look at the previous videos that we've talked about that in the past, about how, if you look back to the 1985, 1990s, how the market kept on rallying despite what everybody thought. So, you have to pay attention to that. Now, that being said, if the market does come crumbling back down, we'll see that as well. And right now, it's not showing any signs of that just yet. So let all the talking heads on radio keep on talking about how they're staying out, and let those who are candlestick and chart savvy be able to, get into this market and really partake in a rally that is occurring as we speak right now. All right, so that's the SPX in and of itself. If we go to the Russell, okay, on a monthly chart, we're looking at the Russell. Everything is still looking healthy again, higher highs and higher lows. Nothing significant as far as candlesticks is concerned. If we go to the weekly chart on the Russell, what we can see is that the market is doing the exact same thing, which is it rallied from down here, okay, pulled back, all right, rallied a little higher, pulled back again, okay, and then rallied now. And that's where we are right now. And again, if we look at this last week, we can see that in this case, we had a higher high and a higher low, which is a healthy sign that this market is still trying to go higher. So even though the SPX is not showing any kind of signs of whether it wants to go up or down, the Russell is definitely showing that we are still definitely in an uptrend, okay? And so until that gets violated, where we have a lower high and a lower low, this Russell market is looking like it's still trying to go higher, okay? If we go to the Nasdaq, similar situation as to the Russell, okay? We have higher highs and higher lows. So those are all healthy signs of an uptrend market, okay? If we go to the Dow Jones Industrial, DJI, same exact situation again is what we've seen, where the Dow put in a higher high and a higher low, okay? Higher high, higher low, which is higher than this candle right here and higher than this low right here. So that's all healthy signs. And we see a reversal signal right here based on candlestick signals, okay? One of the challenges that you can face is like to see how many candlestick signals do you see over here, okay? How many candlestick signals do you see right there? And the last one that we usually look into is the transportation index, and I'm very excited about the transportation index because it was the one that was lagging. Now, it was the one that led the downtrend in the bear market of 2000, or the correction in 2015, however you want to look at that. In this case, I believe this was a bear market because if we look at this high from here, anything less more than 20% of a drop is a bear market. And in this case, you know, the Dow Transportation was definitely in a bear market, okay? Now it's snapping out of that, all right? We can still say that, let's see, if we go from here, this high right here, to where it is today, that's about 14%, 15%. So, you know, anything I think above 15% is a correction. So we just have to wait and see what happens. But it's coming out of it's definitely coming out of the bear market, possibly coming out of this correction as well. But the interesting thing about the Dow Transportation is the fact that what we've seen here is, let me do this again. Let's go from here. What's going on with this? Let's try this again. Hold on. What we've seen in the Dow Transportation on a weekly basis is the fact that, there you go, is the fact that right now we are seeing reversal signals taking place right around this area right here, all right? See about 2 to 3 different reversal signals that is taking place, and that's a very healthy sign, okay? That's a very healthy sign. And when I say reversal, I'm talking about reversal to the upside, bullish reversal signals that we've seen to the upside. All right, so what are these bullish reversals? I'll share 2 out of the 3 that I do see, because the third one is what we call the right side candle, and only if you are a member of our subscription would you know what a right side candle is. But in this case, we have a signal right here, which is called a hammer signal. Okay, so this one candle right here is a hammer signal. That's a reversal signal. And then if we combine all 4 of these candlesticks together, right here. These 4 right here. Okay, if we combine all those 4 together, 1, 2, 3, and 4. If you combine that together, you have what is called a morning star signal, okay, which is also a bullish signal, okay? So now we just have to wait to see whether or not this market is going to go higher, but it's looking very likely like it's going to go higher. And why I like this is because of the fact that, you know, if we can get the transportation index to definitely, you know, go higher, then it seems like all the markets will be in sync, okay? And if all the markets are in sync, that's a very good sign that, you know, we are looking at a market that is trying to go higher. So the areas that I'll be looking for a true breakout, the first true breakout I'll be looking for is if the transportation index can close above this level right here on a weekly basis, okay? If the transportation can close above this, that's a very, very good sign. And then the absolute best sign would be if it can close above this level right here, okay, on a weekly basis. If the Dow Transportation can close above those 2 levels, I'll say, you know, sky's the limit as to where this market can go, okay? Now, fundamentally, why is it happening? I don't know, and to be quite honest, it doesn't really matter, okay? Whether it's quantitative easing, whether it's the government pumping money into the system, you know, whether it's fair or it's not, that's the other guy's problem. The thing here is that the market is showing us that it's trying to go higher, and if the house of cards come crumbling down, the charts will show us that as well, and we would take appropriate measures at that point in time. Okay, but for right now, it's not showing that the house of cards is trying to come down. If anything, it's showing signs of a bullish market. Okay, so those are the 5 major indexes that we're looking at, and it's just showing that everything is looking healthy, with the exception of the SPX that was kind of like, no decision. All the others were showing signs that, this market is still in a healthy uptrend. So we just have to wait and see what happens. Friday was an expiration on option expiration, and that tends to kind of like slow the market down a little bit, but it didn't really slow too much down on Friday, and so we'll see where the money flows into, whether money flows out or money flows into the market starting on Monday, because we are now done with the option expiration for the month. So that will be it. Again, check out our website, subscribe to our YouTube page. We encourage you to do so. But at the end of the day, always remember to trade on the right side with confidence.